By the end of 2025, over 12 million U.S. homeowners will either lose their insurance completely or see premiums explode by 50 to 300%. This is not a prediction. It's already happening. In the last 24 months alone, 7 major insurers have stopped writing new policies in entire states. Farmers, Allstate, State Farm, Nationwide, they're all pulling out. And the ones that stay? They're doubling and tripling rates overnight. For a generation, owning a home was the American dream. Now, insuring it is becoming an American nightmare. How did we get here? And more importantly, is there any way out? This is the story of the great American home insurance meltdown and why millions are about to lose their single biggest asset. The crisis is a perfect storm, the result of 3 unstoppable forces colliding right now. In 2025, the first force is the most visible, our changing climate. The record-breaking wildfire seasons we're seeing in the West and the increasingly ferocious hurricanes battering the Gulf and Atlantic coasts are no longer once-in-a-century events. They are the new normal. For insurers, this isn't a political debate. It's a mathematical certainty. Each disaster costs them billions, and the frequency of these payouts is shattering their financial models. They simply cannot afford to keep replacing homes in areas that are repeatedly hit. The second, and perhaps most critical force, is happening behind the scenes. It's called the reinsurance death spiral. Think of reinsurance as insurance for insurance companies. When your local insurer faces a catastrophe like a major hurricane, they rely on massive global companies like Munich Re and Swiss Re to help cover the colossal losses. But these global giants have seen their own costs skyrocket. Since 2022, the rates they charge to primary insurers have shot up by over 300%. That cost has to go somewhere, and it's being passed directly to you, the homeowner, in the form of crippling premium hikes. The final piece of this toxic puzzle is the soaring cost of rebuilding. Since 2020, the price of essential building materials has exploded. Lumber, concrete, roofing materials, they're all up. And that's before you even factor in labor costs, which have also increased dramatically due to shortages. When an insurer has to rebuild a home today, it costs them, on average, 68% more than it did just a few years ago. This combination, more frequent disasters, more expensive reinsurance, and higher rebuilding costs, has created a financial black hole from which insurers are desperately trying to escape. This isn't just a collection of abstract numbers and charts. This is destroying real lives. Take Margaret, a 68-year-old widow in Fort Myers, Florida. She paid her premium of $2,800 on time for 15 years. After Hurricane Ian, her renewal notice came in. The new price? $18,000. She told us she had to choose between insuring her home of 30 years and buying medicine. Then there's the Miller family in Northern California. After 28 years with the same insurer and not a single claim, they received a non-renewal letter in the mail. No explanation, just the termination of service. Their only option now is the state's high-risk FAIR plan. The cost to insure their home is a staggering $42,000 a year. They're now considering selling the house they raised their children in because they simply cannot afford to protect it. And in Texas, we spoke to a rancher who owned his $1.2 million property outright. After Allstate dropped his policy, he couldn't find a single company willing to offer him affordable coverage. His solution? He's now self-insuring. He asks gambling every single day that a fire or a hailstorm won't wipe out his entire life's work. These aren't isolated incidents. They are the stories of millions of Americans facing impossible choices, trapped by a system that is fundamentally breaking down. So let's break down that hidden reinsurance time bomb. It's the invisible engine driving this entire crisis. Imagine your local insurance company. Let's call them Safe Home Insurance to protect themselves from a huge disaster, like a wildfire that destroys 1,000 homes. Safe Home buys its own insurance policy from a global giant like Munich Re. For decades, this system worked. But now, Munich Re is looking at the escalating risks from climate change and telling Safe Home, the risk in California is too high. We will no longer cover your wildfire losses there. Suddenly, Safe Home is exposed. If a fire hits, they have to pay out all the claims themselves, which could bankrupt them. So, what's their only logical move? They stop offering insurance in those high-risk areas altogether. They non-renew thousands of policies, just like the Millers. The chain reaction is simple and brutal. When Munich Re and Swiss Re say no, the primary carriers like Allstate and State Farm have to say no. And when they say no, you, the homeowner, pay the ultimate price. You're left with either no insurance or a state-run plan with sky-high costs and poor coverage. Let's look at the danger map for 2025. The fallout isn't evenly spread. It's concentrated in specific high-risk states. In California, an estimated 2.1 million policies have already been non-renewed in fire-prone areas. The state's FAIR plan, intended as an insurer of last resort, is now groaning under the weight of hundreds of thousands of new, desperate homeowners. Down in Florida, the situation is even more dire. The FAIR plan, known there as Citizens Property Insurance, has become the largest single insurer in the entire state. It's a state-backed entity that was never designed to hold this much risk. If a major Category 5 hurricane makes a direct hit on a dense area like Miami, there are serious doubts whether it could actually pay out all of its claims, potentially triggering a complete economic collapse for the state. In Louisiana, the market is in freefall. Following a string of devastating hurricanes, over a dozen insurers have gone insolvent or pulled out completely, leaving 40% of the market gone. Homeowners are seeing their rates triple and quadruple if they can even find coverage at all. And in Texas, the combination of hurricanes, tornadoes, and severe hailstorms has pushed the average home insurance premium to $4,900 a year, and it's still climbing fast. This isn't a coastal problem or a fire problem anymore. It's an American problem. So, is there anything you can actually do? The situation is grim, but you are not completely powerless. There are 4 moves that are still working right now to save people money and keep them covered. First, stop getting quotes from single companies. You need to shop with an independent insurance broker. These brokers work with dozens of smaller regional carriers that the big search engines don't show you. On average, this one move is saving homeowners about $1,700 a year. Second, fortify your home. This means investing in upgrades that make it more resistant to disaster. The Insurance Institute for Business and Home Safety, or IBHS, has a standard called Fortified Roof. Getting a new roof that meets this standard can earn you discounts of up to 60% from some insurers, because you are actively lowering their risk. Third, you must be willing to raise your deductible. This is the amount you pay out of pocket before insurance kicks in. Raising it from $1,000 to $10,000 or more will significantly lower your annual premium. It means taking on more short-term risk, but it might be the only way to afford the long-term coverage. Fourth, and this is the harshest reality, you may need to consider moving. In coastal areas, moving just 20 miles inland can make a world of difference in premium costs. In fire zones, moving out of the wildland-urban interface is becoming the only viable long-term solution for many. It's a brutal choice, but it's the new reality. The financial world is taking notice. Goldman Sachs now estimates that by 2030, between 18 and 22 million U.S. homes will be effectively uninsurable. That means no bank will write a mortgage on them, and their value will plummet. We're talking about 1 in every 6 properties in the country. The crisis isn't coming. You are living in it. The question is no longer if your area will be affected, but when. The time to act is now, before your next renewal notice arrives. We've partnered with a service that lets you check your postcode S-specific risk level and instantly get competing quotes from independent brokers in your area. Use the link below. It takes 2 minutes and could save you thousands of dollars and the nightmare of losing your coverage. Like this video if this scared you, and subscribe because, unfortunately, it's about to get worse.